Aviation news portal Flight Global reports Malaysia Airlines has received consent for its scheme of arrangement and restructuring from the final lessor creditor. Earlier this month, its aircraft operating lessors voted on the national carrier's debt restructuring scheme at a meeting, the outcome of which would determine whether the airline can continue flying. It was reported that creditor turnout at the meeting was approximately 95.9% by value, with only one creditor out of 44 failing to vote. This was reportedly because the said creditor was facing challenges getting approval from its financiers. According to Flight Global, Richard Snowden, who is a judge at the High Court of England and Wales, said he received evidence that the creditor has now been able to resolve the communication difficulties with its financiers and has consented to the scheme. Accordingly, Snowden reportedly said there was overwhelming support for the national carrier's plan. Malaysia Airlines brought the proceedings in the UK, as all of its aircraft lease agreements are governed by English law. For the other 6 classes of creditors, the carrier is seeking to reach an agreement with them bilaterally. Australia and New Zealand banking group will be writing down the value of its investment in AMB Holdings or Ambank after the local lender agreed to pay a 2.83 billion ringgit 1MDB linked settlement to Putrajaya. According to Reuters, Australia's 4th largest lender will take a 212 million Australian dollar or 666.3 million ringgit haircut in the carrying value of its 24% stake in Ambank that will lower its half-year earnings results for FY21. On Friday, the Finance Ministry announced that Ambank, which reported its third quarter FY21 results today, had agreed to the settlement over its role in the 1MDB scandal. In a statement today, Ambank Group CEO Datuk Sulaiman Muhammad Tahir said the move will undoubtedly have a material impact on the group's fourth quarter FY21 and consequently FY21 results. As a consequence, he says the group will not be proposing any final dividends for FY21. He notes, however, that the lender remains financially resilient and has adequate capital buffers to absorb the global settlement without an immediate need to raise additional equity capital. In the third quarter of FY21, Ambank saw net profit fall 31% to 263.83 million ringgit. Due to higher allowance for impairment on loans, advances and financing. Revenue also slipped, down 12% to 2.09 billion ringgit. The group did not declare any dividend for the quarter. Prime Minister Tan Sri Muhyiddin Yassin says Putrajaya expects Malaysia to stage an economic rebound this year, in line with the revival of global economies. Recovery is expected to be led by the services and manufacturing sectors, which account for over 80% of GDP. Domestic demand is seen recording steady growth, supported by improvements in the labour market, low inflation and favourable financing conditions, as well as the resumption of major infrastructure projects. Muhyiddin was speaking at an event to commemorate the first-year anniversary of the current government. He cited projections by international bodies, highlighting the IMF's GDP growth forecast of 7% for Malaysia and the World Bank's 6.7% estimate. Despite the rosier outlook, the PM said restrictions on movement and certain social and business activities will remain. These measures will only be lifted once the vaccine rollout hits a certain level of coverage in the community. He said Putrajaya will, however, formulate additional measures in the near future to further assist the people. Separately, Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz said the reopening of more economic sectors under MCO 2.0 has cut the country's losses to 300 million ringgit a day compared to 2.4 billion ringgit a day during MCO 1.0. He also said that the country has managed to limit the COVID-19 mortality rate to 0.3%. Thanks to the curbs. MCO 2.0 is in force in Selangor, Kuala Lumpur, Johor and Penang until March 4th. And an announcement on whether it will be extended is expected to be made tomorrow. Top Glove Corp saw its share price slump by 6.49%, following news that the glove maker wants to raise 7.7 billion ringgit via a primary dual listing in Hong Kong. It closed at 4 ringgit 90 cent for a market value of 39.2 billion ringgit. Analysts, including CGS CIMB researchers Walter Au, are negative on the move, as it will dilute Top Glove's FY21 to FY23 earnings per share. Assuming the over-allotment option is exercised, he estimated this exercise will cut the group's FY21 to FY23 EPS by 11.2% to 15.1%. He added that the exercise is avoidable, as Top Glove's expected stellar FY21 to FY22 results should be able to support its capex plans while it has zero gearing. Au highlighted that the company recently announced a 20% special dividend for the remaining 3 quarters of FY21, on top of an existing dividend policy of 50%. It also spent 1.4 billion ringgit to conduct share buybacks of 200 million shares in the past 1 year. He kept the research houses at call but cut its target price to 7 ringgit 80 cent from 8 ringgit 90 cent. At JP Morgan, the glove bear is keeping its underweight rating and target price of 3 ringgit 50 on Top Glove. It says the potential EPS dilution is 16.22% to 18.65%. TA Securities analyst Tan Kong Jin, however, is positive on the proposed exercise, as it would grow Top Glove's investor base in Hong Kong and North Asia. Based on his back-of-the-envelope calculations, he said assuming completion of the exercise by end FY21, this would bolster the company's net cash position from 1.2 billion ringgit as at end first quarter FY21 to over 8.9 billion ringgit. Though he did estimate EPS dilution of about 15% for FY21, post-completion of the dual listing exercise. Datuk Sri Muhammad Shazali Ramli has been made Pharmaniaga's non-independent, non-executive chairman. He succeeds Datuk Dr. Hafsah Hashim, who has resigned to pursue other interests, according to a bourse filing. Shazali most recently made headlines in December, when he was appointed MD of Bousted Holdings. He was previously MD and CEO of Telekom Malaysia. Prior to that, he helmed Celcom Axiata as CEO before taking on the broader Axiata regional role as Corporate Executive VP and Regional CEO for ASEAN. Meanwhile, according to a separate filing, Bousted's Executive Director overseeing Group Business Development, Izzadin Daud, has also joined Pharmaniaga as a non-independent and non-executive director. He also sits on the board of other listed companies, namely Bousted Heavy Industries Corp, Bousted Properties UAC and Olympia Industries. The appointments come as Pharmaniaga is poised to bottle and distribute 14 million doses of the Sinovac COVID-19 vaccine. The first 200 litres of the vaccine arrived on Saturday and is enough to make 300,000 doses.